All right, not sure if you can see this, but man, the ospreys are loud today. And this one obviously just caught himself a meal. And he's having an afternoon snack. Well, hey there once again. Matt Pfeiffer here, purely for compliance purposes. Mortgage lender, NMLS ID 296861, proudly representing Leader One Financial. I am Matt, the Fish and Finance Guy, and I would like to welcome you to another video on an absolutely beautiful afternoon here in Lee County, Florida, in Southwest Florida. Wanted to share a couple thoughts with you today on a topic that if you are an hourly employee on a full-time basis and you have home buying plans in your near-term future, this is something that you need to be aware of and ultimately be mindful of. So when it comes to income analysis in the mortgage lending world, or the industry, I should say, it goes to a deeper level than when you have a conversation with somebody on a phone to get a new credit card, or maybe sit down with the finance guy at a car dealership to purchase, lease, or finance your next vehicle. There's a pretty in-depth analysis that gets done, and there's some pretty significant rule variations and guidelines that come into play if your hourly income is part-time versus full-time. So while you could be employed, and let's say with a given employer, 30 hours a week, 32 hours a week, 34 hours a week, may categorize you as full-time with that employer for the basis of any benefits or anything they may offer for a full-time employee. The mortgage lending world is still in the day and age of full-time employment being 40 hours on the clock each and every week. No variance, no up and down. Now, if it's 40 or more, that's a little bit of a different conversation. But if you usually work 40 hours a week, but some weeks you only work 38 or 39, this is where things can get a little interesting from the standpoint of the underwriting perspective. And, with the guidelines in place on the primary mortgage products that are available in the market today, so whether that is your standard conventional loans being Fannie Mae and Freddie Mac, or whether that is FHA or VA, or possibly even USDA, depending on where you live, the approvable components within a loan file as it pertains to your overall debt ratio are critically important. And with each of those respective loan programs, there are definitive guidelines and maximums that can't be exceeded for the loan to be approvable. So I bring that up because your income is one of the components that ultimately impact what your debt ratio is. So there is a very in-depth analysis that gets performed with your income to make sure that a given scenario has a debt ratio that is within tolerance and compliance to be considered approvable and saleable or insurable. given whichever loan program it may be. So with that being said, don't want this to be a real long video, but as an example, let's say that you make $20 per hour. Well, with the lending industry, there's really no subjectivity, about usually, most of the time, sometimes, typically. These are not words that play well in the sandbox with the mortgage process or the mortgage underwriting analysis. Everything when it comes to lending, for the most part, is dollar signs or decimal points, and math is math. So if you make $20 an hour and you work 40 hours a week, you gross $800 per week. You don't gross $790 per week. You don't gross, $802 a week. $20 an hour at 40 hours a week is $800. So as we sit here in the first quarter, or just past, of 2026, when we're looking at a pay stub, we're looking to confirm that, yes, you make $20 per hour, but we're also analyzing what is your year-to-date income. And when you look at the year-to-date component, whatever that is, based on whatever the pay date or the payroll period end date was for that paycheck, that number should equate to how many weeks we are into the year. So if we were looking at a pay stub with a payroll period end date of the end of June, that should equate to $20,800 of gross year-to-date earnings based on being halfway through the year. So understand and be mindful of the fact that in addition to what we're seeing as far as your year-to-date income, if you started a job, let's say in April of 2025, I'm going to turn around and try to block the microphone because it is getting rather breezy. I think I'm just ahead of some storms rolling in. So back to my thought. If you started a job back in, call it April or May or June of 2025, there's also going to be a look back on that, and what were your gross earnings for that calendar year based on, relatively speaking, when you started there, and the math is going to be done. So it may be looked at in a standalone capacity for your earnings last year, and then your gross earnings this year, year to date, plus what it was last year, going to be added together and divided out by how many days or weeks that was. And if the math doesn't add up, you could find yourself in a position of needing to be able to document or explain why the income variance exists. So there are some things that could lead to that. If you got a pay raise at some point along the way, if you started a job, spring or summer of last year, you may very well have been entitled to a pay raise after your first 90 days of employment or your first 6 months of employment. And because of that pay raise being what the number is now today, when you mathematically extrapolate that backwards to your hire date, the numbers aren't going to equate. So be mindful of the simple fact that you want to know you either have access to pay stubs in person, like filed in a file cabinet, or that with your company and your HR or payroll department, you have the ability to potentially grab pay stubs going back a little bit in time. And I'm bringing this up today because I dealt with this on a couple of scenarios not too long ago. And the reasons for the variance in the income were very understandable. But the reality of things is that when you did the math from the date of employment or the hire date until current, it wasn't coming up at 40 hours per week. It might have been 39.7 or 39.6, but the reality is that is now part-time status in the lending industry. So the rules change, the guidelines change. And again, math is math. So if it is not totaling out to or equaling what it should be based on mathematical computation, you may need to address that. Now, if you took some time off unpaid, explainable. If you had a pay raise along the way, explainable and documentable. Even with taking the time off, that could be documented or verified from your employer. But be mindful of the fact that if you are in the near term looking to apply for financing for a home purchase or possibly even a refinance if you're a current homeowner, you will want to just kind of have a note of things that took place throughout the course of the last 6 to 12 months in your life. If you had to take a few days off unpaid for some doctor visits or unexpected medical visits or anything else that might have came into play in your world, be mindful of the fact that a lender could inquire about that. And if you have the answer ready to go, or you have copies of your pay stubs from that point in time to explain or document a change in your employment details, or that you had to take some time off and it wasn't, paid time off, it's going to be a lot easier to get through that process than if that's catching you off guard and you don't have access to any documentation and you don't remember what you really did last year. So just, again, a friendly pointer, a friendly tip that whether it's through me or anyone else out there in the space of mortgage lending that you might be finding yourself working with in the future, keep records for yourself, document details, and as silly as it sounds, if you have some unpaid time away from the office or you had to leave early one day for something that you had to take care of, just have a little notebook in a drawer at home or something to be able to document or quickly recall that, oh yeah, back in October, I had to take a couple days off early because of something I was dealing with some family or one of my children. It's for school events, anything at all that it may be. If it's explainable and it makes sense, it's not necessarily a problem. But the reality is it could come up and be asked about. And if you can't explain it or there is no reason for it, then it could be a problem. Hope you found this information helpful. If there's ever anything I can do for you, whether it's actively pursuing financing or even just a question about anything in the mortgage space, do not hesitate to reach out. Happy to help in any way I can. Make it a great day out there. Thanks for watching. We'll see you again in future videos. Well, hey there. If you are still with me, I truly hope that whatever the reason may have been that you just watched this video gave you some needed information or you found even just an ounce of value within it. If you are looking to relocate within the state of Florida, if you are looking to move here from elsewhere in the country, please do not hesitate to reach out to me, whether or not, as I have mentioned in my videos pretty regularly, uh, I am a mortgage lender, but whether or not you may need mortgage financing, I would be more than happy to introduce you to anyone in my circles and my professional sphere of influence if there is anything that you may need here, especially in Southwest Florida or possibly elsewhere within the state of Florida. I have contacts throughout the state. I can't say that I know someone in every city and every town, but I am sure if there is something that you need, I may be able to reach out and find a reliable resource for you. If you have any questions about mortgage financing, that is what we are here to help you with. So whether that is understanding the differences between an FHA loan and a conventional loan, if you're a first-time home buyer, or if you're an investor and you're trying to understand the nuances of a DSCR loan versus a standard qualifying loan for a rental property, I am more than happy to answer any questions and help and guide you in any way that I can. Whether or not you are thinking about doing something in 2 weeks, 2 months, or 2 years, don't hesitate to reach out. I'm here to help you in any way that I can and to be a resource for you. Thank you very much for tuning in. I appreciate you watching my video. And if you would like to see future content, please go ahead, subscribe, hit the little notification bell. And if there is anyone else you know that you feel might benefit from the information in this video, please feel free to share it with them. I am here to be a resource for you. I'll look forward to seeing you in future videos. And if there is ever anything that we may be able to assist you with, I look forward to hearing from you. Reach out via phone, text, email, Calendly link. If you want to do a Zoom call or a phone call, whatever works best for you, happy to accommodate. Take care. Make it a great day. Thanks again. And purely for compliance purposes, this is Matt Pfeiffer, NMLS ID 296861. I am the Fish and Finance Guy. Thanks again. We'll see you in future videos.